Hi, everyone. Henry Adams was a historian and a descendant of 2 U.S. presidents. His quote is also one of my favorite quotes out there. Chaos was the law of nature. Order was a dream of man. As human beings, we're always attempting to replace chaos with order. It's in our nature. Look at our judicial laws. Look at our traffic light systems, and even how we organize our kitchens. We're constantly trying to impose a system of order where there is none. The same striving for order occurs in the stock market. If stock prices in the market seem random, that's because they are. At Investing Buddies, we recognize this randomness of the herd trading, but we know the herd trading is a human herd, and they are always trying to create order where there is none. Our goal? To help you understand this need to impose order and how to take advantage of it in your own personal trading. If you like these short videos on the market, please like and subscribe to this channel. You'll get notice of the next one that comes out. It's important to understand how stocks have been organized for 2 reasons. The first, you're a good investor. You should recognize the various slices of the market that come in and go out of favor as the herd shifts their loyalties to stocks over time. You want to be able to spot these changes early and take advantage of the ups and downs that occur. The second reason is self-survival. I don't want my portfolio overweighted in any one area of the market, especially those positions I intend to hold for long periods of time. The diversification isn't quite as important when you're trading options, but for long-term trades, it's very important. So now let's talk about how the market is divided, and we're going to look from the top down. Trading companies have been divided into sectors, industry groups, industry, and sub-industries. And over the years, these classifications have gone through many changes. For instance, there wasn't even an internet or internet companies 50 years ago. There are 2 classification systems broadly used in the market. The first is Global Industry Classification Standards, or GICS. It's the most widely used. It was formed by 2 big giants in the financial world, the Standards & Poor's and the MSCI. I'll get it out in a minute. Another system of classification is fairly new. It was developed in 2005 by Dow Jones and the FTSE. It is called the Industry Classification Benchmark, or ICB. It's now used by NASDAQ and the New York Stock Exchange, as well as many international markets. There are sectors out there. We're going to look at this from the top down, and we're going to name the 11 sectors and a little bit about what I see in each sector. Energy, pretty obvious. It includes companies that are exploring and producing gas and oil and all the manufacturing and refining that goes along with that. This sector is generally very mature and has modest growth. Materials include companies that produce chemicals, glass, paper, forest products, metal, packaging, and construction materials, and steel. It tends also to be a very mature industry with modest growth potential. The industries, now this is another one that seems really close to the one we just talked about, but it's slightly different, and it's newer companies or newer technology. They manufacture aerospace and defense products, electrical equipment, some construction equipment. It also includes companies that provide services like employment services or security services and transportation services. This sector may show strong growth during good economic times. Consumer discretionary. This is things you don't need and can do without when times are hard. Cars, durable goods, clothing, leisure equipment, restaurants, hotels, that kind of thing. It's very, very sensitive to economic cycles. So when the economy grows, these companies do really well. But when the economy slows down and you tighten your belt, these industries typically slow down even more. The other side of the coin, consumer staples. They're companies that produce food, drink, tobacco, non-durable household goods, and some big retailers like think Walmart. These are things you can't live without. So this sector tends to be mature with modest growth. Healthcare sector, y'all know what that is. It's healthcare services, equipment, technology, but it also includes all the companies in various stages of pharmaceutical and biotech research. You know this sector is dynamic, and it has greater than normal growth right now, and some very, very quickly growing companies are in this sector. The financials, those are the banks, the mortgage companies, consumer finance, as well as insurance companies. This sector has shown good growth and profitability, but it's also significantly impacted by the trend in interest rates. Information technology are companies that produce software and IT products and services. It also contains companies that manufacture hardware and communication equipment, mobile phones, computers, semiconductor equipment. This sector has been the fastest growing one out there, and it contains some of the market's largest companies. Communication services are telecommunication and media companies, but it also has entertainment companies like Disney, for instance. And just in the last, I'd say, decade or so, we've seen a growth of interactive game and content companies. So this sector can offer significant growth opportunities as the world moves more and more online. Now, some of the older companies in this sector, they're facing significant challenges with the more dynamic companies that are coming on board. Utility sector, I think of this as almost the grandfather of sectors. It's the ones that provide the gas and oil and water that we need as a society, but it also includes the traders out there and distributors of energy. It's a slow and steady performer. But the one exception are green energy that are coming on board. They promise higher returns, but also they do face higher risks. Real estate sector, I know real estate sounds like it's been around from the beginning of time, but as a sector, it's a fairly new entrance into the stock market as we're seeing more and more larger companies handle large retail and developers out there, as well as REITs. This sector offers strong growth opportunities, but when the economy slows down, it tends to slow down overall. So those are the 11 sectors out there. And many years ago, I saw patterns of these sectors as the economy grew and deflated. Certain sectors perform better in certain economic times. Watching these cycles is something we train all our investing buddies to be aware of, as it can have a huge impact on how profitable your trading is or will be in the future. Now, this is a blatant advertisement, folks, so just hang in there, but know that I believe every word I'm saying. You're going to want to join us. You're going to have fun watching the markets with us and improving your own trading and your own bottom line. Every week in our Thursday webinar, we discuss the changes and go out and search for stocks to take advantage of sector rotations. This is your opportunity to try us out for free for 2 weeks. You'll know immediately that you've found your trading home. You'll appreciate all the educational videos we have available on our website, and you're going to benefit greatly as we create order out of chaos every single week. And as we analyze trades with you, our goal is that you become a thinking trader and a valued investing buddy. So thanks for listening, and I'll see you next week.